Hey guys, Stock Saturday, and I'm slightly green this week, which means I'm underperforming against the US. Not really sort of keeping up with this S&P and Nasdaq rally. Not doing too bad against the UK, but the UK doesn't tend to sort of perform as well. Certainly light on technology, so you really got to benchmark against the S&P or the sort of all world, or the Nasdaq if you really want to be adventurous. But if you look at some of my sort of top holdings, so Stellantis, Taiwan Semi, emerging markets, and Shell, all sort of flat to down this week. So very difficult to sort of be keeping up if those are my top holdings. Process, some of the others, sort of Process and Broadcom and people like that, sort of had a fairly big drop during the week and then rose up on Thursday and Friday again. So, yeah, they're sort of flat for the week. Meta is doing reasonably well. Kind of considering maybe taking some off the table there. Sort of not really seeing them anywhere in the AI space or anything like that. And the sort of traditional family of apps business is sort of growing slowly, and Reality Labs doesn't seem to be pushing on, as I've sort of covered in their earnings. Even revenue isn't even going up. Obviously, they're putting a lot of money into it, so potential in the future, and they've just come out with a new headset. But yeah, I kind of think at this sort of price, you're basically pricing in Reality Labs being somewhat of a success, which seems like early days to me, or just cost cutting, layoffs, etc., are sort of expected to bring more profit. But I don't really see that as all that bullish. Cost cutting and layoffs being sort of the bullish side. So yeah, considering that, but yeah, the rest of the portfolio sort of not really keeping up, but I'm happy with it. So we've had a few earnings. Broadcom announced theirs, not the full investor sort of quarterly report, but they sort of announce it in their news and just post the figures in here. And it's sort of a bit of a sell the news. People were sort of, I don't know, thinking maybe it would be a bit better than this with all the sort of AI stuff and yeah, switches and whatnot for data centers. But yeah, when they actually come out with it, it's good. It's reasonably good news, but maybe not what everyone was hoping for. You've got revenue up 8% from quarter two last year. Net income up considerably. Last quarter last year wasn't all that good. Earnings per share up heavily, sort of 40%, 30-40%. Cash flows, EBITDA, and everything all sort of reasonably up. Even free cash flow sort of 5%. So again, maybe not the blowout people were hoping for. Forecasts maybe not quite as bullish as people were hoping for. But yeah, semiconductor solutions up 9%, and their infrastructure side sort of trickling along. They still really want the VMware deal to go through. It's still up in the air, as a lot of deals end up sort of up in the air for a long, long while. We remember Nvidia and ARM. I think everyone just thought that was a formality and was going to go through, and it sort of got dragged out, and then cancelled. So there is still potential for that. I do like this. 4.5 billion in cash flow from operations and 120 million on capex. So it's really not a capital heavy business, sort of being a fabless. Ship all of those designs off to TSMC and let them do the hard work. So 3.4 billion on buybacks and a dividend of $4.60, which is very nice. It's a very sort of heavily year-on-year growing dividend with the earnings to back it up. It's not just a growing dividend. You see a lot of companies that have, under 50% payout ratios, but not hugely growing earnings, and they're just growing the payout ratio. So it looks like a a dividend growth stock, but you're just getting paid more of the earnings than you used to. I tend to sort of think follow the earnings, and the dividend will sort of sort itself out. So that would be someone like Broadcom, which I'm pretty happy with. I don't sort of focus too much on the dividend. I'm more happy with the earnings growing sort of consistently year on year, and then you just come to these reports and see, oh yeah, dividends trickling along well. And third quarter business outlook, revenue guidance of 8.85 billion, so it's not terribly up, only up 100 million from last or this quarter just gone, sort of 150 million. Again, maybe people were sort of expecting slightly better than that. And adjusted EBITDA 65%, which takes them sort of pretty much a little bit more than this quarter. So maybe people were hoping for better guidance. It dropped a little bit on this news. Balance sheet hasn't really improved either. Sort of cash slightly down on October 30th, down 1 billion, just nearly 1 billion, and total debt, long-term debt down slightly, and current portion, so just some of the debt's moved into current, sort of barely moved. So yeah, they're not exactly getting a huge cash pile from all of this business, but yeah, again, expecting good things sort of going forward. So moving on to CleanSpark, one that I've sort of not bought for a good few weeks, but I'm now considering it. A few sort of interesting points from them. They were hoping for 16 exahash by the end of the year, and whether they've sort of seen a decent price for mining rigs, or if they're just more bullish on Bitcoin price itself sooner than they expected. But they've bought 12,500 Antminer XPs, sort of the very latest ones. And this will hopefully take them to 17.6, around 17.6 exahash. They're thinking by the end of the year. So exceeding their year-end guidance of 16 exahash. I think so a lot of people were expecting this to be a lofty goal that they might sort of fall a little short of, but it would still be good, if they got to 13, 14, 15, that would still be good, but they're now projecting to exceed it by the end of the year. Whether they're doing this by share sales, we're not entirely sure. It says they've already paid for half of them, and the other half are sort of expected not too far away. So they have diluted up from about 70 million shares to 111 million, I think we're at now. My sort of projections for them and figures that I was working on was sort of sitting at about 150 million shares. So I'm sort of expecting a bit more, but it'd be interesting to see whether they're going to overshoot with these miners now. But then obviously we've got a higher exahash. So it could be worth it, but then on the other hand, they're only sort of offsetting the rise in total hash rate. So difficulty is still rising, more people getting involved. I sort of mentioned before, you've got Russia potentially getting involved. Not exactly a friendly face, but they're sort of considering mining with some of their energy companies and that sort of thing, and it's almost a state-sponsored mining operation. So that could, if they can get the cards, provide rather a lot, because obviously they're not sort of diluting shares to buy miners and that sort of thing. They're spending excessive profits from energy on rigs. So they certainly have the money there to put down. So if they start putting a reasonable amount of cards online, then it could just hit CleanSpark's sort of efficiency a little bit and profitability, basically. Difficulty going up. They're going to need this sort of extra hash rate just to sort of keep up. I sort of have them after the halving mining about 600 Bitcoin, and if we start getting a load more hash rate coming online, maybe they won't be getting that. So yeah, it'll be interesting to see what happens. But they've increased their year-end target, which was pretty good, and they come out with their May mining update. So they mined 609 Bitcoin, which is up 16% from April. Possibly a little bit disappointing. I think people were maybe hoping for a bit more from all the ordinals, sort of spike in fees and that sort of thing. You saw some blocks containing 13 Bitcoin, I think it was, sort of at the peak. So it's up 16%, which they do partly put down to a jump in fees. But yeah, I think people were maybe sort of hoping for, 650, 700, even if it is only temporary, would have just sort of paid for a few more bills without having to dilute. But they're holding on to a little bit more as well, 451 Bitcoin holdings. So that's up quite a bit, as they say, 44%, although starting from a very tiny base. But yeah, 451, sort of $12 million. So yeah, they're starting to build up a very, very small war chest compared to the others. I've sort of always said that I would much prefer exahash over Bitcoin on the balance sheet, because the whole reason I'm in miners is to have sort of a leveraged play on the Bitcoin price. So if your sort of big thing is that you hold a ton of Bitcoin on the balance sheet and Bitcoin goes up, then that just means that Bitcoin goes up the same as mine do in my wallet. It shouldn't sort of be a leveraged increase, whereas profit that you're making from generating Bitcoin would be leveraged, basically. So yeah, I do sort of agree with their sell largely everything you've got and put it into expansion and grow sort of what you're earning. Then when Bitcoin price goes up, they'll be generating a lot at a high price rather than just holding a lot on the balance sheet. So that's good. Washington, they're saying, coming along reasonably well. Miners arriving daily. All units expected to be at the facility by the end of the month. And energization is expected second half of June. So should see a little bit of an increase in hash rate. And Sandersville, making headway in prepping for the land. So it's a little way off. They're still saying by the end of the year. And this would add 6 exahash. So very, very nice. So with this drop now back down to sort of $4.15, obviously it's a little higher than the sort of under $3 that I was first buying, but even sort of $4.15 with their revised hash rate target, and sort of obviously we're a few months on, sort of by end of next year, say, after the halving, I think we could be in a decent Bitcoin position. So a few of the other holdings that I've got, where I'm sort of, expecting, 20%, 30% gain, sort of on the best case scenario in the next year and a half, say, where CleanSpark, if Bitcoin does what I'm hoping it does, then could quite easily 10x, I would say. Not to be sort of anything like guaranteed, but and it could happen in 2025, even if it does happen rather than next year. But yeah, even if we get a even 5 to 10x by 2025, that would still be a hell of a lot better than a few of my holdings. So I'm thinking of sort of maybe selling a few bits off and sort of adding to this. And it's in the ISA, which I do need to top up the ISA anyway. So yeah, we'll see. And I haven't done Atalaya mining in a while. Kind of just sits there because they've got sort of plans that are running, this quarter, next quarter, even for the rest of the year. So they're not doing all that well at the moment, but once their sort of plans come into place, then they should be a lot better off. They are sort of, compared to my other miners, a sort of very high cost miner. in doing entirely copper, but at $3.12 all-in sustaining cost. Doesn't leave you a whole lot of headroom at sort of $3.65, I think, $3.70 copper. So yeah, they're not doing all that well, but working to get this down. So yeah, quarter 1 2023, revenues up, which is pretty good. EBITDA down slightly because costs are up since then. Q1 was sort of mostly before the war last year, so a little bit of a tough comparison. But energy costs are down. So all-in sustaining cost come down from $3.59 per pound to $3.12, which is rather nice. So I mean, at $3.59, they would be practically loss-making with the other sort of small amounts of overheads and that sort of thing to go on top of that. So it's good that that has come down. And copper production up about 700 tons. So that's good. And their outlook for the rest of the year is still sort of rather unchanged. Production guidance 53 to 55,000 tons at cash costs. I don't really sort of look at all that much. I'm an all-in sustaining cost guy. $3 to $3.20. So yeah, if we have potentially got close to the bottom in copper, still think it could go down a little bit more, and then I would be looking to sort of load up copper miners if we're sort of forward looking. Yeah, it could sort of get to close to break even if that's their all-in sustaining cost, but you can't sort of second guess these things. And yeah, I was having a read through their expansion progress, sort of going reasonably well. Preliminary economic assessments and that sort of thing going in. Still sort of trying to plan, various ways to get their mines through that have been rejected before. Still interested in the Elix plant. They're saying this could produce higher purity copper or zinc on site, allowing them to achieve higher metal recoveries from complex polymetallic ores. So what maybe wouldn't have been profitable to mine before could now potentially be. Also lower transportation and concentrate treatment charges, and a reduced carbon footprint, which we all love, even though the green side hate us, or anyone in the mining industry. So yeah, again, sort of more expansion plans and that sort of thing. All sort of, I don't really take too much into account. I do kind of treat that as a bit of a bonus, and think that we've got 6 years, I believe, mine life left for these, and that they may have to spend some of the profit on buying other current miners rather than sort of, I don't like to hope that or sort of factor in expansion projects coming successful. So I think that's just a little bit too risky. And just a quick check on their balance sheet. So again, sort of not a huge amount of change. Cash down about 7 million. Sort of everything else largely the same. Property, plant and equipment slightly up. But on the debt side, it's looking a little bit better. Current debt down from 20 million to just under 14, and long-term debt down just over 2 million. So pretty good on the debt side. Always good to see less, certainly in a high interest rate environment. So they don't really have a huge amount of debt at all now, compared to the cash. It's a reasonably nice net cash position. So a quick look at the news. Not a lot that piqued my interest really until sort of Thursday and Friday. We had the UK house price index numbers for May from Nationwide. A little better than expected, but still negative, 0.1% negative for May, which was a bit better than expected. and still brings the yearly down to minus 3.4%. So not the huge drop sort of everyone was expecting. People still having to remortgage at higher interest rates, but it's not having a huge effect just yet on sort of, causing people to be forced sellers and that sort of thing. In terms of new mortgages and that sort of thing, mortgage approvals down from previous, and it was expected to go up. So, yeah, mortgage lending was flat previous month and was expected to be 1.25 billion in the positive, and it was 1.38 billion negative. So that's a huge miss. And yeah, net lending to individuals down, sort of slightly positive, where it was expected to be pretty good. So yeah, the volume's drying up. Basically, we're not getting a crash just yet, but certainly the volume is drying up. This is April, not May, where the price index was May, but we'll see where that goes. On the inflation side, Europe do literally, these are provisional figures, but on the 1st of the month they do their inflation figures for the previous month. So the May preliminary figures, these may get adjusted, but are incredibly low. Well below expectations. Core CPI for the month 0.2%, compared to an expected 0.8%. This brings the annual down to 5.3. The sort of headline numbers are down heavily as well, but these include sort of energy and food. So what the central banks tend to look at, I always say, agree with them, look at core. That's sort of whether the whole economy is coming down. So yeah, they're a lot lower, but unemployment didn't go up. So I guess they would call this a perfect scenario. And then Friday, the big jobs numbers, non-farm payrolls heavily smashed the forecast. Down, was expected to be down from last month significantly. Last month's also got revised from 253,000 to 294. Was expected to be weak, and it was 339,000. So people have sort of read into this a little bit, that it's potentially people coming from the gig economy back into employment. So it's maybe more of a shift than a huge increase in jobs. And there's also obviously the ongoing people having two jobs, maybe a job and a part-time job, or maybe they work two part-time jobs instead of a full-time job. So it's potentially, one person that now has two jobs rather than one, one extra job in the economy for, one extra person employed. Some people even have three part-time jobs. So yeah, there's always people that sort of dig into these figures, and that's sort of quite helpful to see. Again, sort of what potentially could back that up is the unemployment rate going up. So higher number of jobs, but unemployment going up 3.4%. Last month was expected to go up slightly, and it's up. So 0.3% increase in unemployment in a month is sort of quite an increase. Surprised we haven't seen more sort of fallout from this, or sort of people highlighting this. I think everyone's just looking at the big payrolls number. So we'll see. And that's it for the week, really. As I say, not buying into this rally. I will probably miss out on a bit of gain, sort of, if it does carry on. But I also do say a bit more defensive on my stock side, because if we are sort of in a tech bull run, high liquidity and that sort of thing, and the bottom's already over, then I would expect my crypto side to be sort of outperforming. So yeah, I don't mind the stock side sort of being a little bit more defensive. If I was all in stocks, yeah, maybe I would be taking a little bit more risk. But I've still got this small amount of cash ready to do something with, potentially sort of moving that over to Interactive Brokers, looking at Embracer Group and KGHM, the miner, and sort of potentially, as I say, looking at things like Meta and potentially the Vanguard Emerging Markets, sort of moving some of that money into the ISA. So I've been sort of buying the gold and silver miners, but also maybe thinking about topping up CleanSpark. So I haven't put anything into this ISA just yet this year, and I do need to. So wondering sort of when to make that jump. I don't want to open a Interactive Brokers ISA with new money. I would rather just transfer my IG trading account over there. I would still probably rather subscribe to Trading212 for this year's ISA. So we'll see. No more bonds sold this week. Everything was sort of up reasonably well. Didn't really see a decent opportunity, so that stays there for now. And yeah, the gold and silver miners sort of doing okay. Maybe if we get one more pullback, then we'll have another bond sale. And the IG ISAs sort of barely moved. As I say, CleanSpark down slightly. Atalaya sort of had a good end to the week. Pan American still sort of nowhere, basically, 15.52. Not looking to add to it. I think they'll do well, but they're more of a sort of safe bet where I'm looking a little bit more speculatively at the small caps. And Chinese tech had a reasonable week, up sort of 10% or so. So that's pretty good. So yeah, it's underperforming, but I'm bullish for the next year and a half, to be honest, on what I'm invested in. Certainly in the ISA side more so. So leave your thoughts in comments below what you guys are buying, if you're outperforming me, and like and subscribe. See you soon.